Hello guys and welcome back to another video. In this video I'll be going over the ICT A+ entry checklist that I look for to always get me my high probability setups. Okay, so without further ado, let's get straight into the video. So how this process goes for our A+ entry checklist is we have a 5-step protocol that we always follow. Okay, so the first step being a liquidity sweep, second being an SMT divergence between two correlated assets / markets. Third, we look for a displacement. Fourth, we look to enter on a premium / discount depending on whether we are bearish or bullish. And then fifth, we look for a clear and obvious PD array to enter off of. Now guys, here is an example of what this protocol will look like. So first off, we have a clear and obvious pool of sell side liquidity that we see getting traded below. Secondly, we then wait for our SMT divergence between our two correlated markets. Say for example, this was NQ and this was ES. So we have NQ making a lower low and we have ES making a higher low. This will be our SMT divergence. So then step 3, we then look for displacement. So do we get a displacement above a swing high, forming our market structure shift? Well, we can frame it off of this swing high right there. We get a nice and obvious displacement to the upside. Now fourth, we will look to enter off of a premium / discount depending on whether we are bearish or bullish. In this instance here, this would be a bullish scenario. So we can clearly see we've had a displacement to the upside. We mark out our low to high displacement range. 50% is here, and then we will look to be entering anywhere below at 50% or below. Okay. And then finally, we then look for a clear and obvious PD array that we will look to enter off of. Now this can be in the form of an order block, a fair value gap, or whatever PD array of your choice. So we enter and then we look to target either liquidity or any premium array of your choice. Alright guys, so now I'm on the 1 minute on NQ and ES. I'll be looking to take my trade based off NQ. Okay, so let's go. So first off, we need to wait for a liquidity sweep. So let's mark out our pool of liquidity. Has it been swept? Yes or no? So right here, you can clearly see a nice pool of liquidity here that has been swept. Now let's compare this exact same low with ES. Okay, so we have this obviously taken here on NQ, but we have not taken it on ES. So this has also qualified for an SMT divergence now. So we can label this as SMT. Now that we have an SMT, we're going to wait for some displacement. Okay, we get displacement here on NQ. So now once we get our displacement, we then look for premium and discount. So we must be entering in a discount because here we are bullish. So 50% is there. We want to be entering at 50% or below. And then our PD rate that we'll be entering off of, well, close to 50% is this down close candle, which is a bullish order block. You can also combine it with this fair value gap that we have here. Okay, but obviously you don't want to include the bit that's in a premium, so you can narrow it down like that. And then also the opening price of this down close candle, which is the bullish order block. So then if we enter off of the opening price, which is approximately where equilibrium is, this will be a high probability entry. Stop loss right below the low, and then looking to target this high right here for buy side. So if we play price out, let's see what happens. Okay, we get filled right there, and we hit take profit like that. Alright guys, going into our next example, I'm on a 1 minute chart on NQ and ES. So this time here, what we can see is that we've seen this high get taken here on NQ, however failing to take out that high right here on ES. So we have a clear SMT divergence at the highs right here. Okay, so we have a liquidity sweep there and we fail to take out the high there. But following on from that, we then get displacement. However, if you look closely, we get another SMT at the highs right here. Right here, we make a higher high on ES. However, if we look here on NQ, comparing the exact same highs, we failed to make a higher high. So we have another SMT. So I'll be taking a trade on ES because the SMT that we got here took out a high before the displacement. Here we failed to take out a high. So I'll be looking for this one because we got the liquidity sweep right there, right before the displacement. So now we mark out our premium and discount. Okay, just like that. So we'll be entering above 50% and we need to look at a PD array that is above 50%. And a very obvious one to me right here is this fair value gap. Okay, now you might have seen another one, potentially this breaker right there, right here. These two down close candles. Okay, so breaker right there. So just to be sure, I'm going to be entering right on the fair value gap at equilibrium. Okay, so we can remove that because it's in a discount. We want to be entering in a premium. And then placing our stop loss right above the high. Okay guys, so now I'll enter my trade right there and I'll be looking to target a nice 1 to 2 risk reward. So now if I play price out, get filled there, and we lagged a bit, but in the end we hit take profit right there. So now I am on a daily chart, and I'll now be going over a top-down analysis. So first off, what I can clearly see is we have a very obvious SMT divergence at this swing low on both NQ and ES. We failed to take out this swing low right here, whereas we took out here, so we had a liquidity sweep valid, a valid liquidity sweep on ES right there. Now that I'm on the daily, I'll now drop down to my 1 hour time frame. Now guys, before we get right back into the video, I really quickly want to talk about my private mentorship. Now guys, if you give me 30 seconds, I promise you, you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I've taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading, and they are quitting their jobs for good. I have literal students that are making yearly and monthly salaries in a day. Okay, you guys might think this is a lie, but trust me guys, when you know how to trade, this is completely possible and is a reality that most people are living. Now you'll have a whole host of benefits as listed here. You can have a read for it yourself. This is a lifetime access for a one-time payment only. I have now put the price down by £100. It was previously $249.99, but you will now be getting it for a limited time only for $149.99. okay, make the most of this offer guys. Learn the skill set properly. I'm willing to teach that to you guys here for a specific price. I will teach you the exact blueprint to help you get funded and quit your job guys and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So with that being said, let's get straight back into the video. Okay, here on the hourly, we can see we've swept that low right there. Okay, failing to close above it, below it. Also here, failing to go below it. So now I'll look for a displacement to the upside. So let's see if we get that here. All right guys, so now we've gotten our displacement and market structure shift above this swing high right here. We can now look for an entry. Now we need to mark out our premium and discount level and our PDO rate that we'll be looking to enter off of. The one I'll be looking to take a trade off of based on the way it looks currently in price action would be ES. As you can see, this is a very lackluster movement to the upside, whereas here we had a bit more energetic movement, and this one looks more likely to have a nice energetic price move to the upside. Okay, a nice low resistance liquidity run. If we mark out our fib from the low to the high, 50% is here. We've just hit that now, and let's mark out our PD right now. So a very obvious one to me right here is this breaker candle right here. These two up close consecutive candles, and we can look to take our entry like that. Okay, so enter equilibrium, overlapping with this breaker, also this inversion fair value gap right there. Okay, so we have another overlapping PD array right there, another confluence to our trade. Okay, so this is another level that's in close proximity. We also have these 3 consecutive down close candles, which makes a bullish order block. Okay, so if I mark out mean threshold, it's right there. So me personally, just to be safe, I'll be entering right at the top of the breaker or equilibrium. Okay, so stop loss would be right at the body, and then I'll be looking to target this high right up here. Okay, that's a nice 1 to 2.5 risk reward. And now if I let price play out, and as you guys can see, we hit take profit just like that. Now guys, if you didn't want to enter off of an hourly time frame, that's fine, because we can drop into a lower time frame and look to target these highs instead right here. All right guys, so now I've dropped down into a 15-minute time frame, and as you guys can see, once we have a displacement here, market structure shift above this swing high right here, we can then look for our same process. Okay, look for a discount entry in this region here, and we can enter off of this fair value gap right there on a lower time frame. Okay, because we have the higher time frame backing, so we can use this fair value gap instead for an entry and place our stop loss below this low here. So now targeting again partial here, and then looking to exit fully here. So now you've almost doubled your risk to reward by just going down into a lower time frame. Also guys, with this lower time frame entry right here, we have the midnight opening price right there, and we get our Judas swing for the day like that, entering into our discount array, and then we expand to the upside. Okay, so again, accumulation here, we have our manipulation and our distribution. So that's the end of the video guys. Thank you so much for watching, and I'll see you again next time.